Hello, everyone. So welcome back to the channel. Matt with Green Bar Trading here. I'm going to go over a trade that I just took on the QQQ. Took it to the short side. And I want to go over what we're currently seeing in the market at this moment. All right. This goes basically off of my video yesterday and our weekly watch list videos the past couple of weeks, starting to see that rotation, right? That rotation, that selling of tech, that rotation as far as the news goes and how the market is trading the news. The market right now is a little bit different. So I'm going to go over that in a second with data that we saw come out today. All right. So what did we see come out today? We saw the ADP. This is the private employment, and we saw a really, really big miss. Okay. Much less private sector jobs added than what was predicted. Okay. The estimated was 261. All right. Very weak. We saw the ISM services 51.2%. We were supposed to see, right? The estimates were 54.3%. So again, weakness, right? S&P final US services PMI, weaker than expected. All weak numbers. Yesterday, the JOLTS, a huge miss, another weak economic data that we saw. And on Monday, the ISM manufacturing, worse than expected, right? S&P final US PMI, again, worse than expected. Definitely seeing the economy slowing, right? So what used to happen when we used to see this? The stock market would be up a whole bunch this week. Seeing weak data used to be that trade that the Fed is going to cut rates. The Fed is working. Everything is good. Now things are starting to shift a little bit into the economy. Because if we do go into a recession and the economy slows, what do you think is affected the most? It's their earnings. It's companies' earnings. Right now in the market, it's simply not priced in to the current market value for all the stocks that you see being traded. It's just not priced in yet. And we're starting to see some weakness the last couple of days. So how did we do? Okay, so before I get into that, I want to show you the bonds. So the bond yields, again, for the second day in a row, are down huge. So when we get bad economic data, the bond yields go down. A lot of people buy bonds. So the bond yields have gone down a lot. We used to see, when yields pull back this much in the last couple of days, we used to see the NASDAQ go to the moon, right? It's not happening. So be aware that the market structure has changed. So now going into what we're seeing here, and what I've been trading a lot lately is the NASDAQ market, because the NASDAQ market, as seen on my weekly watch list video, as gone over yesterday, we were approaching that really overbought territory. Same thing we saw back here and over here before seeing big pullbacks, right? The S&P was not at that overbought level yet. This is super extended, right? Highs on the year, really extended off of its 20 EMA, which I expect to be tested at some point, and really extended off the 200 and off the 50. The S&P 500 was not that extended. So that's why I wanted to trade the Qs. I saw that there would be much more of a range, right? A lot more room to profit. Now, the volume today, it's only 1 o'clock, but the volume today, I think, is going to be pretty high when the day is finished. Now, if that does happen, that's going to confirm what we have been thinking, right? What I said on our weekly watch list video, that the trade in the first quarter, right? The first quarter just ended a couple days ago. That trade in the first quarter was that tech trade. Now what I'm thinking is the big guys are starting to take profit. All right. And that's why we see the market pulling on back a little bit. But it's also not trading in sync like it used to. When the bond yields go down, usually the NASDAQ market was going up. So we're seeing that divergence right now. News, economic data. Bad news used to be good news for the market. Now it is bad news for the market as recession fears now climb in. Now, what did I trade? In order to trade, you need to look at key levels, okay? A key level that I had for today, so preparing in advance, and we post these key levels every single morning in our Discord. If you are interested, that link will be down below. But I was looking at this 317.50 level. It was very clear on Monday. Monday, we saw this really nice rebound. So what this looked like to me was a demand zone, right? When you see a very big move, right? You see a very big move out of a certain spot that it was trading around. That to me suggests, okay, this is going to be a very key level. You can see the consolidation around 317.50. So if we came back and tested it, which we sort of did, not to the 317.50 exactly, but that's close enough. We then saw a big spike again. So for me today, that 317.50, well, I wanted to see, is that still going to be a demand zone? And the answer was no. So when this broke down, the way that I traded this, we look at this on the 1 minute, the way that I traded this was I waited for the retest of that area. And then we saw a very big move down, right? This is 4 minutes. And it went from 317.88 in 4 minutes, 5 minutes, all the way down to 316s. All right. So that suggests to me that that retest was deserving of getting in. And that's where I got in here. So I wanted to see that pull on back a little bit because it wasn't good that we broke 317.50. What I just showed you guys on the last 2 days, that's been really good support. So it wasn't good that we broke down, but I didn't want to chase it down here. I wanted to wait for a retest and then get in short. So that's the way that I traded the Qs today. And I was able to take advantage of this entire move. So looking at it over here, these are the contracts. And this is for the day. I'm just going to put this on the 1 minute. All right, you can see here how it slowly climbed up. As the market sold off, the options contracts, and this is the option contract that I traded, I took a 7-day out because I wanted to hold this thing for a long time. But I got such a big move in my favor right away that I wanted to hold on to all that premium. And this was a $400 trade. A great trade for an hour and a half time. Can't beat that. So that was good. So I just took all the profit off. Now, if I do get a bounce, I could get in again going short, but I locked in my gains. So my first contract, the 3 contracts I bought was at 360. So, right around this area here, I got in and it really did not go against me. This was a good trade. Came back up to here. I took my first contract off at 490, second contract off at 494, and then I took the third contract off at 465. Now, why did I do that instead of leaving a runner? And I did leave this for a little while, but I did not like that we were coming down to, hang on a second, this area right here. So this is another key area. All right, key level. It was coming down to here, and then we started to rally a little bit. I didn't want another V, right? That like we've seen in the past. And I didn't want to give up all those gains because that would have really hurt that last contract. So I just wanted to get out. If we did continue to go, could always get short again around 317.50, even VWAP. We'll see, just waiting to see. But this 314 level, that also looks like it's going to be a very good level today. So it's important to know where these levels are. That's why we post them every day. So that's it. A nice $400 trade, just this break, retest, and then taking it short. Now, once it broke here, you want to let that go to this next key level because there was really no more support in the middle. So that's why I let those contracts continue to go down. And yeah, that's it. So I hope that you guys learned a thing or two. If you have any questions, leave them down below. I answer every comment. Thanks for watching. I'll see you guys on the next one. Take care.